So this is what the institutions that are responsible for managing the global economy think about the future. OECD, the world economy is in the midst of the deepest and most synchronized recession in our times. What you can see here, and it's interesting, what you can see here is that most cases, as I understand it, most of these institutional forecasts are designed to be 50% base case, then 25% probability on either side. That's kind of roughly the way they're thought about. Right now, there's a general view that the downside has a much greater chance of happening. It seems to be about a 35% or one-third, roughly, probability of happening. Because all of the catalysts for upside growth, the financial services sector, the U.S. consumer, government spending, monetary easing, all those tools have been spent. And we've got to work our way through the problems we have. Now, I just redid this slide based upon March numbers, and what had been the previous downside case is now the base case. So in the last 3 months, the institutions managing our economy have adjusted their view of global growth downward. And we don't have time to go into this whole thing, but a couple of things that are very interesting. One is you can see the United States is expected now to have some, other than China, some of the best economic performance in the developed countries for a couple of reasons, which we can get to in a minute. Both not go down quite as far and come back faster. It's kind of interesting. And that has to do with the fact that we're acting more aggressively against our problems than some of the European countries, which people still think have hidden banking problems they're not dealing with, and also our flexible labor market that allows us to reallocate jobs very quickly to where they need to be for growth. Problem in the UK is, of course, London is to the UK as New York is to New York State. They've got they have an economy unusually dependent on their financial services sector, so that creates a real impediment to their growth. Europe had made a growth acquisition about 10 years ago called Eastern Europe. And they have been growing as a result of the growth in overall as a result of the growth in Eastern Europe during this time period. Eastern Europe is now in crisis. Why? I didn't go through this, but they borrowed money. You recognize the story now, right? They borrowed money to fund their growth. That they borrowed their money in U.S. dollars. The U.S. dollar is way up as a result of the financial crisis. They can't pay back their debts. They're now in crisis. So Eastern Europe has slipped into a crisis that was sort of unexpected before this, dragging Europe down. Also, Germany, the major engine of the European economy, is export-oriented, and exports industries are suffering mightily right now as a result of consumers around the world not spending. Japan is a really interesting case because imagine if 10 years from now we were back into recession and we'd spent all this money and done all this easing. We'd thrown everything we had at the problem, and now we had to go back at it again. That's kind of where they are. They've just come out of their lost decades, starting to grow again, and now they're coming back into this world set problem. And they are unusually dependent on the export sector. China, people think the Chinese growth miracle is going to continue. The question I have is if U.S. consumer behavior changes fundamentally, the Chinese economy is a mirror image of the U.S. economy, right? Because they produce what we buy. And if we had changed from a consumer-led to a saving and investment-led society, I'm not quite clear. No one's really explained to me how the Chinese continue to grow at these levels, but we'll see. But this is, and you can see the growth engines in the world, China, India, Brazil, that people have been looking to are all considered by the institutions at risk. It's a global synchronized recession with no clear locomotive. Here's the geopolitical perspective on this. I won't go into this at great length, but it's very clear that free market capitalism is under a cloud. Western capital markets. Sarkozy famously said, laissez-faire, c'est fini, right? The central tenets of modern capitalism have been undermined as a result of the nationalization of the financial services sector around the world. And we're now facing financial services reform. We have to be very careful not to do the public policy equivalent of bleeding the patient and make the situation worse during a time period when we need the financial services industry to help us recover. The U.S. global economic power and the appeal of U.S. democracy is eroding around the world. We're going to go to a period of forced restraint because these massive deficits we're running. We can't do something like the Iraq War anymore. We simply can't afford it. So we're going to have to turn inward.